I'm Dan Fitzpatrick at StockMarketMentor.com on Wednesday, April 10th. And I want to look at Apple today. Look, this stock is still, I know it went up 2% today, but it's still kind of mired in just congestion. But here's one technical thing that you got to understand. Look at the 50-day moving average, which is basically defined resistance. Well, as the stock kind of starts printing these lows right around this level, after the decline that it's had, 50-day moving average keeps drifting lower along with the decline. Then suddenly the stock starts trading sideways. Well, it's taken the 50-day moving average time to kind of catch up with this. Now, the 50-day moving average doesn't continue to drop. Now it's about drifting sideways. And the reason is because the last, 20 or 30 days or so, the stock's basically been at this level. This is actually pretty obvious, but only after, a lot of times after it's pointed out to you. So if the 50-day moving average is resistance for this, what's been happening is the stock's had to make a run because it's been so far below the 50-day moving average. By the time it comes up to test it, there's been so much buying pressure used up that there's just not too many, folks that are still willing to buy Apple because it's already made such a big run. Here, similar kind of thing. Here, we didn't even really get to it. And then finally down here, the stock had to make quite a run just to test the 50-day moving average. It went from here, 50-day moving average is up here. So it's still pretty far down. Not as far down as it was here, or certainly here. Now, though, we're at a point where this recent low is just barely below the 50-day moving average. So it's not taking that much buying pressure to push Apple up to test the 50-day moving average. Well, so let's say Apple continues through the 50-day moving average, which it's likely to do if the NASDAQ starts picking up steam. It just now started to perform. Well, if Apple blows through the 50-day moving average, it's not just going to go up in a straight line. Sorry. But what we would look for at that time would be some kind of a pullback to hit a higher low, to not come down to this bottom, but instead a little pullback and then start to move higher. This right here is when it would be the safest time to buy Apple. You go ahead and buy it now, and then if Apple does in fact break through, pull back, and then start moving higher, great, you got in at this time. However, let's say the company announces earnings and they ain't that great. Well, then Apple's come up here, it's faked you out and fallen lower. You don't want to do that. So instead, I would suggest waiting. If you want to take some Apple now, great. You're about 8 points too late, but that's okay. You can still do it. I would suggest waiting, though, before taking a big position in Apple. Wait for the stock to break through, then come back, and then start to move higher. So it's the second move higher that we're really most interested in, because then you have a new low, a higher low, not this low here, where you'd put a stop under here, but a higher low where then you could put a stop under here. Now you're trading. So anyway, try that technique on Apple. Now members, our stocks are doing really, really well. Not too much has not been doing well. Today it was a heck of a breakout day for the market, which is something that we've been expecting and trading and anticipating, positioning for quite a while. So we got to capitalize on that. So let's just stay long, but I want to get to the strategy session and we'll cover that now. And by the way, if you're getting these free videos and you haven't tried Stock Market Mentor, please do so. It's a risk-free trade. You cancel within the first 30 days, nobody's going to take your money except you.